Now we will learn one more charting style, that is Heikin charting style. Among all charts, candlestick charts is the best and fastest way to understand the conditions of the markets and the psychological situation of the market. But Heikin chart that came after the candlestick chart is one of the several different achievements of the Japanese traders, because Heikin charts even are easier than candlesticks to understand. Heikin can be translated as average pace, and it is sort of an indicator that makes the price chart to look smoother. Most of the times we get a great deal of reversal signals that didn't lead anywhere. And if we keep acting on every single signal, we will end up our money and very soon close the trades. Here we can see we are getting 3 false signals with candlestick pattern, and these are the bullish signal. After this signal, the market is ranging, and after this bullish signal of candlestick, market also ranging. This is the bullish candlestick pattern, but we can see after making a slight up move, market is totally in sharp fall. This is also a bearish pattern, that is bearish engulfing pattern, but you can see market is getting a nice uptrend after this signal. So this is also a false signal. This was also a bearish candlestick pattern, but prices are going in upward direction. This is also a false signal. And in this chart also we are getting many false signals with general candlestick patterns. So here a good strategy requires not to follow every signal but to skip those false signals by using Heikin charts. Heikin charts look like the candlestick charts, but the method of calculations and plotting of the candlesticks on the Heikin chart is different. In candlestick charts, each candle shows 4 different prices: open, close, high and low. In green candle, this is open, close, high and low. Here each candlestick is independent and has no relationship with the previous or next candlestick. But in Heikin chart, each candlestick is calculated and plotted using some information from the previous candlestick. The open price in Heikin candlestick is the average of the open and close price of the previous candlestick. The close price in Heikin candlestick is the average of open, close, high and low prices. High price is chosen from one of the high open and close price of which has the highest value, and the low price in a Heikin candlestick is chosen from one of the low open and close price of which has the lowest value. So, candlesticks of a Heikin chart are related to each other. As a result, this chart is slower than a candlestick chart and its signals are delayed. So, we can also call it as a lagging indicator like a moving average. Also, Heikin charts don't have too many charts patterns that are very useful. But as such delays eliminate a lot of noise, creates a much smoother charts and eliminates a lot of false signals. So most traders prefer to use Heikin charts. You can see this is the regular candlestick chart of Nifty 50. The candles are very irregular and we cannot find any signal with the candles. But this is the Heikin chart of Nifty 50. In this chart, we are getting clear signals of buying and selling, as these green candles show us the buying pressure and the red candles show us the selling pressure. In Heikin chart, a long green body with long upper shadows but no lower shadows is considered as bullish candle, and a long red body with long lower shadows but no upper shadow is considered as a bearish candle. An opposite color candle that look like a regular doji candlestick is considered as a reversal candle, and a small body surrounded by upper and lower shadows is a signal for a pause. First of all, we should find out the direction of our trade by using some tool or indicator. For example, we can draw a trend line. We can use RSI, moving average or MACD, any indicator that we will learn later in this course. If the trend is bullish, we should consider only long positions, and if the trend is bearish, we should consider only short positions. When we get a bullish candle after a reversal candle, we can go long. Here this is a doji candle and we are getting a bullish candle here. You can see there is a small wick in this candle, so we will not make any entry here. Look at this candle. This is the candle having upper wick but no lower wick. So We can make our long position here. We can make our entry here. Now these two candles show us that the trend is slightly weak here, but here we are getting a doji candle and that is of red color, so it is a signal of exit. We can go long here at this candle and we can exit here. Similarly, in a downtrend, this was the doji candle. Now the next candle is the bearish candle. There is a long lower wick but no upper wick, so we can make our entry on the next candle. We can make a short sell position here and we get a doji candle here that is of green color, that is of opposite color, so we can exit here. This is the 15-minute chart of Nifty 50. Here I just add the 50-period moving average to this chart, and when prices are above this EMA, this shows that the trend is bullish. This is the doji candle, and after that we are getting a signal candle here that is of green color and having no lower shadow. It means it is a bullish candle. So we will make entry at the next candle and exit when we get a doji candle of opposite color. Again we can make our entry here when we get a bullish candle, that is a signal candle. We can make our entry here and we will exit when we get a doji or the opposite color candle. This is the candle of opposite color, so we will exit here at this candle. As the trend is bullish, we will not make our short sell entry here. Again, when prices are above this moving average, this is the signal candle. This is the green candle, that is a bullish candle, so we can make our entry at this candle, and here we are getting a doji candle of opposite color, so we will exit here. Again, we are getting a signal candle here. We can make our entry on the next candle at this candle, and here we are getting a doji candle of red color, so we will exit here. Now prices are below this moving average. Here we are getting a signal candle that is below moving average. Also, this is a red color having no upper shadows, so this is the signal candle. We can make entry on the next candle. This is our entry position, short sell position, and when we get a doji candle of opposite color, this is the doji candle of green color, so we can exit here. Again we can make entry here, we can short sell here, and this will be our exit position. In this way, we can add different types of tools and indicators to Heikin Ashi charts to get confirmation of our entry and exit signals. I'll see you in the next lecture. Thanks for watching.